When it comes to dividend investing, the number one thing that everybody looks for is the dividend yield. Everybody cares, is the dividend yield high? Is the dividend yield low? But what nobody thinks about is the dividend yield on cost, and that is the hidden way to become insanely wealthy through dividend investing. We're going to go over how you can be getting incredible dividend yield on cost, looking at different things, different scenarios on how even Warren Buffett doubles his money very rapidly through dividend yield on cost. So what's up and welcome to the channel. My name is Hunter, and Investors Intellect. All we do is talk about dividends, investing in passive portfolios, making the best of our passive income, doing different things so we can enhance our financial freedom. But before I do go any further within this video, all I ask that if you enjoy it, you make sure to subscribe and you turn on post notifications for videos coming out every other day. I'll see what you guys are doing, what you guys are thinking. So make sure to leave a comment below what your thoughts are on this video. I'll see all that stuff, and also really helps out the algorithm, helps out the channel, helps me get out this video to as many people as possible. But enough of that talk, let's get into this video. So what we're looking at right now is my current dividend portfolio. Over this past year, we are up 37.54%. And if you want to get access to this portfolio, it's 100% free. You can check it out by using the link in the comments below or link in the description below. It'll say dividend portfolio, and you click on that link. It'll take you to my M1 Finance Pie, and you can go download this for yourself. It's 100% free. You can just look at it if you want to look at it, give you something fun to do, whatever it might be. But also, if you want to use M1 Finance, use the link in the description in the comments below. You'll get free $30 once you deposit $100. You and me both will be getting free money, helping each other out. Now in my portfolio, the expense ratio is 0.06 because of these ETFs within this income fund, and there is one ETF within the tech and cloud computing fund. And then the dividend yield is currently at 3.4%, which is pretty solid. I'm not aiming super high for a high dividend yield just because of the simple fact that I am still young and I have time to grow this portfolio, not looking to absolutely be living off of dividends for a while. But enough of this talk. Let's talk about the power of dividend yield on cost. So first off, what is dividend yield on cost? Yield on cost is the annual dividend paid by the security, which is also known as a stock. So yield on cost is the annual dividend paid by the stock divided by the original cost basis of the investment. It is different from your dividend yield, which measures the annual dividend yield against the current price of the security of the stock. Since most stocks rise in value over time, the yield on cost is often, but not necessarily, higher than the current dividend yield. So to give you a visual aspect of what this looks like, let's say you bought a stock at $50 per share, okay? You buy a stock, $50, as a dividend yield of 4%. Your annual dividend is going to be $2 per share. Let's say you just bought one share for simple math, okay? So now you're getting $2 in annual dividends. Fast forward in time, let's say 1 year goes by, okay? The stock is currently sitting at $75. The dividend yield is still sitting at 4%. Now your annual dividend is $3. Your annual dividend rose by 33% because the share price appreciated. You didn't make any extra investments. You still only paid $50 for this stock, which is now worth $75. So you have $25 in unrealized capital gains. However, your dividends coming in are going to be flowing in at a much higher rate than they were before just because the stock price went up. The dividend yield did not change, but your yield on cost increased to 6%. And that's because now you paid $50, but you're getting paid $3 on an annual basis, which is 6%. And that is how you get really, really rich within dividend investing. So looking on that, you can see Warren Buffett doubles his money on these stocks every 2 to 5 years, which is insane stuff. The first stock we're going to look at is in 2013, Bank of America and Merrill Lynch released a report comparing the average annual return of stocks that initiated and grew their payouts between 1972 and 2012, with the average annual return of stocks that don't pay dividends. Okay, so they pretty much tested dividend-paying stocks, that annual increase, and non-paying stocks. So dividend-paying stocks over this long-term period, this 40-year period, averaged a 9.5 annual increase in just share price appreciation alone, while non-payers managed to average a bump of just 1.6% year over year over this 4-decade stretch. So I'm pretty sure you can just kind of tell that dividend stocks long term are the real winners. You can go do the studies, you can go do everything. Dividends account for so much of returns within the stock market. So, looking on this right here, however, Buffett has an extra advantage when it comes to dividend stocks, and that's because they invest for the long term. Him and his team invest for the long term, and his initial cost basis on long held stocks can be very, very low. So what you want to do is you want to buy low and you want to hold, and you want to let these dividends roll in, and that is how you get your dividend yield on cost to increase incredibly. So the first stock that he's doubling his money on is Coca-Cola. He's been in this stock since 1988, and he bought it at first at $3.25 per share. They pay out $1.64. Now this article was back in 2020, October of 2020, so a little over a year ago, but still you get the gist. He has a yield on cost of 50.5%. Put in another way, he is doubling his initial investment on dividends alone every 2 years. That is what the power of buying and holding provides. All you can do is be patient and buy low. So despite Moody only having a literal 0.64% dividend yield, they have a 22.3% yield on cost. That's insane because he bought at $10 a share. They're at $294 this past week, which was last year. They're at $387, so his yield on cost is going to be even higher than that. They're doubling their initial investment every 4.5 years without reinvestment. That's incredible stuff, right? Third up, he's got American Express. This goes to show that he's not just getting necessarily lucky on one stock individually. He's investing in multiple stocks. So since 1993, he's been invested in American Express, and he has an average cost of $8.49 per share, or an initial cost of $8.49 per share. And the $1.72 per share that they pay out in dividends, his yield on cost is 20.3%. It takes just short of 5 years without any reinvestment for Buffett to double his money from American Express's dividend payout. This is incredible stuff. Like, just looking on some more stuff, the fact that you can turn your portfolio into a money printing machine is incredible. You just buy stocks, you let them ride up, you let the dividend yield ride up, and you are going to be creating a portfolio literally from your phone, from your computer, that just prints money. It's insane stuff, the potential that you can make within the stock market, and it's all about assets and timing. Get in as soon as possible. Whether you might be somebody who's a little bit closer to retirement, or somebody who's a little older, or somebody's a little younger, start today, because the best time you can start is right now. Sure, the best time was 10, 15, 20 years ago, whatever it might be, but the next best time is right now, because you can't change the past. All you can do is focus on building your portfolio literally right now, today. And if you haven't, I highly suggest you do. Remember, not financial advice. You can use my portfolio if you want to. It's 100% free. You can go check that out. Looking on some more yield on cost examples, if you invested in, this is arguably my favorite, like, restaurant food stock, which is Starbucks. They currently have a dividend yield of 1.72%. If you invested them just 5 years ago, your yield on cost would already be 3.66% compared to their 1.73% dividend yield. Now, another one of my favorite stocks is Broadcom. Now, this one is where you find the real bangers. The way to get real big stocks that you have these massive yield on costs is to buy whenever they're sort of newer companies, maybe even when they're not paying a dividend. You want them to have a smaller market cap and let them have room for growth. And that is a little bit harder to do, and it can be a little bit difficult, but I will be making a video in the future on how to find these stocks and just how to get a massive yield on cost with these potentials. But what you'll see right here is if you would have invested in Broadcom 10 years ago, whenever the price was just $33.09, your yield on cost would be 43.52%. Literally in just a little over 2 years, you're doubling your money from dividends, and it only took you 10 years. Just look on this example real quick, okay? I just want to show you the power of literally, this is assuming no share price appreciation, no dividend increases, just dividend reinvestment, okay? You get paid all these dividends. You buy 100 shares of a stock at $10, so it pretty much costs you $1,000, okay? You give it a year, you got paid $50 in dividends because your dividend yield is 5%, you got $50, all right? And then you just reinvest those 5 shares. That $50 turns into 5 more shares. And you keep doing this, and then you have all these new shares. And over a 12-year period, your 100 shares is now sitting at 179.6 shares. Okay, your value increased by just below $800. and your yield on cost is sitting at 8.55% because you didn't add any more money into this portfolio, and you're just getting paid way more dividends, which is incredible things. Looking on to some more stuff, just like we talked about this, the example we looked at did not add any more principal capital, meaning they did not put any more money in that investment portfolio. They did not increase any dividend payments, and they did not increase share price at all. Literally, the only thing it did was reinvest dividends. So just imagine that you bought low, you never sold, you added more money on a daily, weekly, monthly basis, whatever it might be. You got dividend increases, and you kept reinvesting your dividends in all your stocks, all your ETFs, your investments kept slowly rising as the market trends to do. Your yield on cost is going to be way higher. Your amount of shares owned is going to be higher, and your dividend payments are going to be larger. Your portfolio value is going to be larger. The only way you can do this is to get started, and you have to be patient and trust the process. And that's why I created this channel. I want to help you. I want to help other people create these portfolios and make the best of their financial freedom. But everybody, that's what I have for you in this video. So if you did enjoy it, make sure to subscribe to the channel, turn on those post notifications for videos coming out every other day. Thank you again. Make sure you give the video a thumbs up, all that good stuff. Leave a comment below, just anything, any feedback, maybe some of your favorite stocks, whatever it might be. It really helps out the algorithm, really helps out this channel get to its best potential and get this video out to as many people as possible. Thank you so much again. Check out the links in the description and comments below for some free stocks, some free money, or if you just want to look at my portfolio. And I will see you at the next video.